Hey everybody, buckle up, because right off the bat, wait, what? The mighty Bitcoin fund universe just got hit by a crisis wave. Investors yanked a staggering $3.5 billion out of US listed Bitcoin ETFs this month. This isn't financial or investing advice. The setup, it was all riding high, then crash. Picture this, but Bitcoin funds were cruising, were pouring into portfolios, launches happening, headlines giddy with a new age of crypto. Boom, the tide turned. This month, US Bitcoin ETFs are on track for their worst month ever since these funds launched just under 2 years ago. That $3.5 billion exit nearly matches the previous record, $3.6 billion back in February. To the rollback, who's bailing? The giant in the room, BlackRock Inc.'s Bitcoin fund, ticker IBIT, which holds roughly 60% of all the assets in the group of Bitcoin ETFs. That fund alone saw about $2.2 billion in redemptions in November, meaning unless something changes fast, it's heading into its worst month ever. The situation, funds flowing out, more selling pressure on Bitcoin's price, more investors nervous. Repeat, a loop nobody wants to be in. Well, now why is this happening? Well, here's where it gets spicy. The big question, what's triggering this massive exit? One side, the sentiment around crypto seems to have cooled. The excitement of earlier in the year is fading. Another piece, these spot Bitcoin ETFs are amplifiers. When money flows in, price pumps. When money flows out, price gets squeezed. Some analysts estimate for every $1 billion outflow, Bitcoin's price drops around 3.4%. Investors are shifting away from risk on assets and maybe looking for safer harbors. What does this all mean? Well, if the outflows keep up, these Bitcoin ETFs could cement a bleak monthly performance for Bitcoin itself. The worst since the crash of 2022. For plain investors, when big institutional capital pulls out, retail tends to feel the ripple. If you're in Bitcoin or thinking about it, this is a flashing yellow light. On the flip side, could this be a buying opportunity? Maybe, but you'll want to see a reversal in flow first, not just hope. For the ecosystem, the fact that ETFs are now central to Bitcoin's performance signals how mainstream crypto has become, and that mainstream means big swings when sentiment shifts. It's kind of like everyone scrambled off the dance floor at once and left the DJ scratching an empty track. The party's still on in theory, but the vibe just changed. No way! You might say, yes way, this is real. All right, if you like that breakdown and want to stay ahead of the next shockwave in crypto, make sure you hit that subscribe button and ring the bell, because tomorrow we dig into why some of these funds started pulling out now and what that might mean for your stack. Stay sharp, stay curious. Catch you on the next one.